Welcome back. You're tuned into Buy Now, Sell Now, and we continue with the earnings corner. And now we are joined by the management of PDS. And remember, PDS has reported a weak set of Q3 earnings. In fact, the profit has slipped 30% on a year-on-year basis, and the margin is it likely to sustain or not? And to give us segmental growth drivers also for PDS, we are now joined by Sanjay Jain, who's the Group CEO for PDS. Hello, Mr. Jain. Thank you so much for joining us. Mr. Jain, with the recent US and Bangladesh trade deal, with zero duty on the products made from US imported cotton and man-made fiber, how will this impact the overall industry and PDS as well?
Hi, good morning. I think every day there is a new development with respect to tariffs. So yesterday we all learned about the Bangladesh US tariff realignment. I think on the whole, with respect to impact on the industry, Indian exports to US have about 18% tariff, and the Bangladesh exports have about 19% tariff. So tariff-wise, there's just about a 1% difference. But then, besides the tariff, I think today Bangladesh scores well in terms of productivity, in terms of the labor availability, which is at present far better than India. And it also scores well in terms of the time it takes for the apparel to be sailing as well. So all these two, three things, also have a bearing. But notwithstanding, India is investing into these areas. But the duty differential of 1%, at present does not compensate for the areas in which Bangladesh is doing better. With passage of time, all the initiatives that we have taken from the government side, textile park, supply chain efficiency, internal dependency on man-made fibers, these things over medium term will give benefit. At present, I think PDS is very well placed to make the most of it. As you are aware, we have two factories in Bangladesh, one in fashion tops and one in bottoms, and we have one factory in Tirupur. So our factories which have been exporting from Bangladesh should now benefit. On one hand, there have been a duty-free access from Bangladesh to UK and Europe, and now with this rationalized duty structure at about 18% or so, so we benefit from that. The other aspect is that if, of course, the exports to US from Bangladesh is done from the cotton-led fiber yarn, cotton-led yarn that is getting imported from US, then the access to US is duty-free. So this, of course, is, while not a large part of the total cotton import of Bangladesh in terms of import from US, but whatever extent it is going to be beneficial to Bangladesh. So therefore, PDS well positioned to make the most of what has evolved yesterday on the duty structure. With respect to our factory in India, I think that also immensely benefit from the FTAs got signed, in terms of EU FTA, UK FTA, and the reduced duty structure. So we believe PDS is well positioned from its own factories and from the partner factory network to make the most of it that has evolved in the last few days on the duty structure.
All right, Mr. Jain, that's really sounding good as far as the impact on PDS is concerned, the benefits are concerned. But then let's come to your financials. You reported a weak number in Q3 FY26. Just wanted to know the triggers behind this and what will be the growth outlook going forward now?
See, as you're aware, on one hand, the entire world is under pressure. The customer sentiment is low, whether it was geopolitical situation, war-led situation, high interest rates that have been prevailing a while back, or inventory correction. All of that has led to a subdued customer sentiment in UK, US, and Europe. In fact, many leading retailers have witnessed decline in sales. Notwithstanding that, PDS has grown about 6% in revenue in 9 months and close to 2% in Q3. I think what has led to we being so far able to navigate, in terms of flat or a marginally better sale is number one. Today, UK is about 43% of our total revenue. On one hand, UK retail sales have been flat or tending downwards, but we have grown 24% in UK in the last 9 months. What has led to this growth? On one hand, the retailers are under consolidation mode themselves, and the retailers are also consolidating the vendor base. They don't want to deal with too many vendors across the world. That leads to internal cost structure at their end being high. And they see PDS as a credible counterparty to whom they can migrate from dealing multiple vendors to dealing with one vendor. That's why, as I said, in our UK market, flat retail sales, but PDS growing 24%. That's one thing. Second also is that, while Bangladesh has emerged well on the duty front in the last couple of days announcement, but there have been geopolitical disturbances in the country for the last year or two. And as a result, the retailers have been trying to broad base the sourcing, not just have an over dependence on a given country. And India, on the other hand, has been taking a lot of structural initiatives to boost textile exports from India. And we therefore invested into Knit Gallery Factory. So as retailers are consolidating, as retailers are trying to broad base the sourcing base, PDS was well positioned to serve them, from India as well. And then there's one more factor that I want to add here is, US market as well. For example, we have actually grown 19% in the last 9 months in US as well. If I talk about overall pie of PDS revenue, there is about 7-8% of sales of the total pie that comes from our new initiatives. New initiatives could be product, could be focus on customer. The growth is 45% in the first 9 months. If I talk about manufacturing, which is another 7-8% of the revenue, the growth is 35%. So I think a careful perusal has allowed us to navigate the tough times ahead. On your second point of what is the outlook for next year, the sentiment, I won't say is beginning to look any bright with respect to customers, buying. It still is subdued. We all are watching, that there should be a reversal of trend and the inventory
Right, Mr.
positions
Jain.
of retailers will work out. Yeah. But the consolidation
Yeah.
that I mentioned should give us 10-15% growth next year in
Right.
terms of PDS to garner more share.
Right, point taken, Mr. Jain. And with that, thank you so much for joining us. It was a pleasure to have you on the show. But we'll have to quickly wrap up this edition of Buy Now Sell Now. Kavita and I will take a leave for now. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.